Let's kind of go ahead and get started with the first question here.
Yeah.
So Dave, in your opinion, man, you do a lot of things in real estate and also you're in finance. I don't know. I don't even know how much you're up to in terms of how much you guys have in assets under management. But in your opinion, you deal a lot with real estate, commercial real estate specifically.
Hmm.
What do you think is happening right now in commercial real estate? What are your overall thoughts?
It's an interesting landscape, Dan. It really is. I had a call this morning with some international capital that's looking to come into the U.S. market, and they're looking for opportunities. And we found a common ground real early on, and that was everything that is up is now down, and everything that was down is now up. It's like an Alice in Wonderland landscape right now for commercial real estate. So if we look at the different asset classes, retail, your malls, your strip malls, offices, light industrial, and then multifamily. Those are really the the big four. And we don't need to be a genius to know that retail commercial real estate is just getting brutalized right now. It's taking a beating. There's a lot of operators that are taking these things at maybe 75, 80 cents on the dollar. And when you and your wife were up in Boston, we were talking over coffee, and it was, yeah, they might be 75, 80 cents on the dollar now, but I might be buying those at 60 cents or 50 cents on the dollar, Q2, Q3, Q4 next year. So, retail is scary. Office space is also a sparse asset class right now. The office owners are scrabbling to find how do we cash flow something where nobody wants to show up for. Plus, you've got the additional renegotiation of leases. It's supply and demand. It's the fundamentals of economies. So office space is getting challenged. Interesting point on that is if you can identify office space that you can convert, if you can find a better and highest and best use of that space, change it to a different class or classification, I believe there's a good strategy in there. What we didn't talk about was leisure. I mean, the hotel marketplace, roller rinks, Monkey Joe's where the kids go to bounce up and down on the inflatable toys. I mean, what's the one locally? We have it's like a indoor trampoline park. These fantastic facilities, Laser Quest and all that stuff. It's all hurting, and it's hurting dramatically. So, those asset classes, for me personally, Dan, they don't make sense. So what does make sense in commercial real estate? A roof over somebody's head.
Yeah.
We're going to be the ones who, turn the economy just like we did in 2008, 9, 10. There'll be entrepreneurs and real estate investors that drive this economy back to where it needs to be. It's always been my belief. And we do that through supplying decent, clean, affordable, safe housing to people who are going to get hurt by this pandemic. So, that's kind of like a broad overview, but that's definitely my take on it.
Hello, Warren Buffett here, telling you to like this video and subscribe to the Clock Brothers. It's the best stock I think anybody could ever make right now.
Yeah. Now, you mentioned a couple of different classes there, right? Classifications. You mentioned one aspect where we have stuff like retail, we have stuff like leisure, real estate that hosts Laser Quest and these trampolines and these fun things, along with hotels. And we always say that never catch a falling knife. So it seems like we've got those things. And then on the other hand of the spectrum, we've got multifamily, we got industrial warehouses, a lot of these pieces of commercial real estate that have excelled during COVID, that have done well. Now that e-commerce is booming because of, people don't want to go outside. They want to get things delivered to their door. E-commerce is booming. So the real estate needs to back that up. Do you see in the next 3 to 6 months here, do you see that kind of even falling apart even more? Or do you see that perhaps even, mellowing out and all things being the same?
Great question.
Or the other end of the spectrum in the next 3 to 6 months?
Yeah, the next 3 to 6 months, we're really just going to begin to see the opportunity. We have not, in my opinion, even scratched the surface of what the opportunity looks like. What's the definition of luck, right? Is where opportunity meets preparedness. Everything that we've been doing in our business has been preparation for what's coming. And, as the single family market adjusts, which it will, I don't care who you are, I'll fight you tooth and nail on the fact that the correction is coming. There's so much data to support the fact that the single family market will receive a correction, from the lifting of the forbearances in the mortgages to the moratorium on tenancy evictions. As all of these things come into the marketplace, as the jobless claims, yeah, we've seen a reduction, but they're nowhere near they want them to be. We're still 3 times the amount of unemployment we were pre-COVID. These are all the real numbers, man. These are all the real numbers. So, Q4, Q1, and 2, I personally believe, and we're bullish on it, Dan. We really are. We believe that will be the buying opportunity that, they're kind of whispering about it. Nobody really talks about it too loud. But what do the cool kids call it right now? FOMO, right? FOMO, right. Fear of missing out. There's FOMO in the marketplace, and people are again, they're like, what's going on? What's going on? Who do I listen to? Does this guy make sense? Does that girl make sense? And you know what? I'll use that word sense, and I'll stick a crazy word in front of it. It's called common sense, right? It's almost like a dirty word, isn't it? Did you hear him? He just said common sense. Filthy potty mouth, but common sense, fundamentals, transference of goods and services for incomes and movement of capital. When those things are not prevalent in the marketplace, it creates that chaotic landscape. So look, there's macro and micro markets, right? There's the big picture, and then as you drill down into certain zip codes, it's a different scenario. And where we are in Florida, just to give you an example, we have 0, Dan, outbound marketing calls for lead generation. 0. Our budget is 0. We don't need to spend a dime, because with our history in that marketplace, we're known as the closers. Go to those guys when you get in trouble with an apartment complex, because that's what we invest in. So we're seeing our inbound calls probably increasing anywhere between 75 and 80% of where we were only 3 months ago. So if we're just beginning, just imagine what it's going to look like, 3 months, 6 months from now, to your point. Again, man, we haven't pulled the Band-Aid off of this crisis. And when that Band-Aid comes off, we'll really begin to see, what happened, what really happened. And then how do we start to grow again? Because we got to get beaten all the way down first.
Yeah, I think you're right, man. When you look at the YouTube atmosphere, you've got a lot of individuals who are claiming to be experts, and they're very quick to jump on the gun. But you and I think we're aligned in saying that, listen, we have yet to see anything. These forbearances have yet to wear off. There's a lot of things. Now, having said that, there's a lot of uncertainty. A lot of people are asking questions. I know your channel, you guys have a lot of great informative pieces on what's going to happen with the economy, your experiences as a real estate investor, stories. Sure. Do me a favor, man. What's your YouTube channel? We're also going to have it in the link in the description below, but tell us real quick what your YouTube channel, what is the name?
Yeah, Freedom Venture Investments is the name of the company. And look, man, it's funny. We're generations apart, you and I. I could be your father, right? So if you ask me what my handle is on any of my social media, I probably wouldn't know. I know the name of my company. It's actually there on the wall behind me. Look, freedomventureinvestments.com. But I'm sure that our YouTube channel parallels with that.
Speaking of which, I want to ask you, let's do a little bit of a rapid fire now. I'm going to say an asset class, and I want you to give me either a yay or a nay on the asset class, what your thoughts are on it. We'll do it really quickly. But I want to ask you, because like we just mentioned, you're a practitioner. You're one of those guys who are actually doing it, as opposed to individuals who, no disrespect to them, but they may be, running a YouTube channel full time and making videos full time, and they don't necessarily have the time to be investing in real estate full time like you and I do.
Sure.
So having said that, let's go ahead and first start with hotels. Yay or nay, would you buy into it right now?
Nay. Fear is false evidence appearing real, false education appearing real. There is so much misinformation around COVID. It's vaccine, no vaccine, masks, no masks, transferable, not transferable. Fear is such a powerfully dangerous emotion. It makes people make stupid decisions. And when fear is prevalent in the marketplace, people aren't going to say, let's go stay in a hotel. They're too scared to, some will, right? but the majority won't. So if I can't rent it, I can't cash flow it. So the asset class doesn't make sense to me.
So nay on hotels. What about retail? Yay or nay?
Nay now, yay 8-10 months from now. Again, COVID hasn't had its full impact yet, and we are getting more and more comfortable with online commerce. So the need for brick and mortar in its current structure or current process, it's not necessary. Have you been to the mall lately? That's a no, right? It's a no.
Multifamily, yay or nay?
Yay, 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 yay. Look, man, statistically, people have looked at, it's called Maslow's hierarchy of needs, right? And Maslow's hierarchy of needs says that shelter is right at the top of our human, it's caveman stuff. And people will pay their rent and they will pay their mortgage first. So let's be in a position to allow them to do that, right? People they just take care of themselves first in their shelter. So always yay to multifamily investing.
Yeah. And last but not least, single family housing market, yay or nay?
That's tough. Yay with experience, nay without.
I like that.
Yeah, you got to, man. You got to. If you're a newbie, if you're a first-time investor, if you just kind of read a book or came out of a free hour-and-a-half pitch from somewhere, I beg of you, just hold on for a little while. Get your education up the gradient. Get better at understanding, because you can get very badly hurt if you don't have speed of execution in a single-family buy, fix, and flip market. It can change on a dime. We saw it in 2008. It'll happen again. And your after repair value is out the window. So yay if you know what you're doing. Nay if you don't. Hang in there a little while longer. It's okay. Your time will come.
I hope you guys enjoyed that video. Just a reminder to like this video and also subscribe to our YouTube channel. Also, if you guys want to get a free copy of our book, 0 to 75 units in 1 year, it's literally how I went from 0 to 75 rental units all in 1 year. I've got case studies, stories, techniques, everything that you guys need to be able to go from 0 to 75 rental units in 1 year and start your real estate investing career. So it's free. Go to 0 to 75units.com. The link will be in the description below. I'll see you guys in the next one.